everyone. Welcome to Stock Market Today. It's Ali Corum and Ed Carson here with a look at the action in today's session where we saw broad-based gains for the major indexes and oil coming off by about 10%, Ed.
Yeah, it was interesting action. It was nice to see the big price gains. Not a lot of volume, which isn't the worst thing as it turns out. But we're going to take a look at Arista Networks, Google, and Eli Lilly, three stocks that are setting up to set up.
All right, I like it. Well, first, let's take a look at those major indexes today. So the NASDAQ closing up with a gain of 3.6%. We also had the Russell 2000 up about 3%, the S&P 500 up 2.6%, and the Dow up 2%. So great to see those broad-based gains today after coming so close to the danger zone, that low of the rally day on February 24th. So we're starting to come up, but we can't just take this one day in isolation, and that volume is a key component to think about as well.
Yeah, the price gains on the major indexes were all strong enough to be a follow-through day to confirm the new rally. But the volume, though, was well below yesterday's volume. It needs to be higher than the prior day's volume. So this is not a follow-through day. That's probably a good thing because Justin Nielsen went over this on IBD Live. Follow-through days below the 10-day line that are, this close to the rally low, that's just not. Those rallies just don't tend to succeed very, very often. And you can just sort of see, it just doesn't feel like momentum is building on momentum. Yes, today almost feels like the first day in a rally. Kind of thing. So
Right.
if we strengthen for a day or two, maybe power above the 21-day line or the early March highs, either before or after a follow-through day, that would make you feel a little more confident that it's getting above something, because this just sort of feels like a one day in the midst of several bad days.
Exactly. Yeah. Follow through days should be decisive, or, have that decisive look to them. And this definitely doesn't have that look. We're still in this downtrend, and those key resistance levels, as you mentioned, Ed, still to contend with. Let's take a look at the S&P 500 here as well, bouncing, trying to get above its 10-day line, and the Dow Jones Industrial Average as well, trying to claw its way back higher, still below that 21-day line here too. And look at the Russell 2000 rebounding. It was up yesterday as well, but the big story that's continuing today is the price of oil. So one visual proxy for that we can take a look at is this USO ETF. So coming off by almost 12%, Ed, after looking pretty vertical over the past few sessions.
Yeah, and so while this took off a few days, it's still up so much over the last several weeks. Just little headlines make these big moves because it had gone up so much. It probably didn't take much of a trigger to see this. Is this, could it keep on falling? Sure. Could it get a rebound? It just depends on the headlines that we're going to get in the coming days and weeks. So energy stocks didn't do that badly. They hadn't risen quite as much as oil prices, and they didn't come off as much today.
Yeah, so definitely key to note there. Here's a look at the XLE ETF, down about 3% today. And we talk about there could be an escalator up, elevator down. And that's why looking at how extended a stock or ETF is above its 10-day line, looking at that rate of ascent, those are some clues. We've kind of been warning that something like this could happen. And here it did. But we'll have to see how oil stocks continue to react, as this could likely fluctuate or stay at high levels for a while, depending on those other global factors at play here, Ed.
Yeah.
And yeah, go ahead.
No, that was it. I was just agreeing with you.
Okay, just making sure we cover that. All right, well, let's take a look at Arista Networks. So ANET here, setting up to set up, as you mentioned, Ed. Maybe is this, if you are trying to visualize a chart pattern here, is this kind of a double bottom that potentially could be taking shape here in the early stages, at least?
Yeah, it could. I mean, this Apple sort of has this look. I mean, you have that February 24th low, and then we have the low from the last day or two. So it's sort of ugly looking double bottom. I mean, though it can work that way, it's certainly 133.97 would could be an early entry at least, or or you could use just a trend line from the top that might get you something closer to the 50-day line. It's not there. And part of it is that one of the reasons why it was good we didn't have a fall through day, there really wasn't much to buy. I mean, even stocks that were
Hmm.
sort of closer to buy points than this, they had sort of backed off and maybe they rose a little, fell a little, but they didn't really move. I mean, most of the big moves were these stocks that are way off highs. Those were the ones that were up 10%.
Right.
And it's nice to see. So yeah, there's this. The relative strength line has held up pretty well for you. It hasn't. So that's nice to see. So if you had a couple more good days, you could start to see it. The PE ratio, while it's above the S&P level, this is nowhere near the levels of a lot of these high growth stocks. And that's a more reasonable, especially given the growth rate. It's got pretty solid growth. So that doesn't seem, in that kind of, in this environment where we've been looking at more lower PE stocks, this doesn't look so bad.
Hmm. And you make a great point there about the lack of quality setups on a potential follow through day like today. That was one of the asterisks that we had on the follow through day earlier this year, is that we weren't seeing a whole lot of great setups. Of course, we have seen a lot of great stocks from a stock picker's perspective, but there's a difference between what we're seeing in the current environment from that perspective versus something like coming out of the coronavirus crash, for example.
Yeah, and it also is weird because some of the stocks that are doing well right now, those commodity plays, I mean, it's possible that commodity prices coming off is what helps drive the rest of the market go
Right.
up. So even the strong sectors might be the laggards in a rally. So it's unusual in that circumstance as well.
Very unusual. I agree with you, Ed. Okay, well, let's take a look at Google, Googl. I guess we'll say on the weekly here, real quick. Good to see that these weeks had some support here, Ed. Even though testing levels to the downside, able to climb up and reverse higher. That's what's at least in process so far this week as well. We'll have to see how the week turns out, but it is approaching some key levels.
Yeah, it's like Arista. It's like it's getting toward there. So like if it has another good day or two, it can get above its 50-day, 200-day line. The 50-day just going underneath the 200-day, which is not great. But another day or two, that might serve as an early entry or an entry as a long-term leader. Um, this stock in another week or so would probably have a new base, but you could sort of see that whole thing going back to sort of mid-November as sort of one long consolidation. So it's been doing all right. The relative strength line back in late 2021, we were saying, oh, the relative strength line is going nowhere. But in 2022, you can say, hey, that relative strength line isn't going anywhere. So I mean,
Yeah.
so that's just sort of a positive in this environment for some of these tech names that are actually holding up versus the S&P 500.
All right. Well, we'll have to see if it can get above those converging moving averages and continue to set up, because it was pretty disappointing to see that strong earnings gap and for it to quickly fill and then some, Ed. And so I think it's Google's health can be a clue as to the health of the overall market. So if we continue to see Google pick up, maybe the rest of the market will too.
That's a good point.
All right. Well, now let's finally take a look at Eli Lilly, LLY, setting up in a base next to base pattern here. So it's carving the right side of a base, but it almost seems like if we can just see it trade tightly from here, have that 50-day line start trending higher again, and then see some sort of pullback, that might provide a potential entry for investors here. But what would you like to see in this chart, Ed?
Yeah, I'd like to see it to get a little higher. I mean, maybe toward the old buy point around 271 to 275, like around those levels, and form a handle right around that area, and then break out. Because yeah, if it went straight up, it isn't like going vertical or anything. But if it's just nice to pause, you always like to see that. But especially in this kind of market where anytime a stock goes on a run, it seems to have to pull back. So you'd like to see it pause for a while, then move out. It's just this is medicals should be relatively insulated from swinging oil prices and
Mhm.
geopolitical issues. I mean, healthcare spending is often paid by the government or third-party insurers, so that just keeps on going, regardless of what else is going on. So we'll see. There do seem to be a lot of medicals that are setting up, whether it's in the drug space, hospitals, health insurers. They aren't really going yet, but they could.
All right. Well, another potential setup to keep tabs on. Thank you so much, Ed. And thanks everyone for tuning in. We will, of course, be back tomorrow morning on IBD Live with more. So make sure you tune in, investors.com/IBD Live. And then we'll see everyone right back here tomorrow.